right. Well, as folks are trickling in, I will go ahead and just welcome you all and start off with some brief introductions. So hello, everyone. Again, welcome to today's webinar. My name is Catherine Lyons. I am the Director of Policy at the Economic Innovation Group. And today and this month's webinar is on achieving impact in opportunity zones through local partnerships. I will be co-hosting with Rachel Riley of ACEs and Archers. And we are really excited to be joined by a great group of guest speakers, including Leslie Smallwood-Lewis of Mosaic Development Partners, Lisa Bethal-Mirage of Rev OZ Capital, Graham Allison of Opportunity Zone Development Group, and Donna Gambrell of Appalachian Community Capital. So we are really excited to hear from this fantastic group of practitioners about how they are working with local communities to achieve impact through the Opportunity Zones policy. It looks like we are about at a quorum, if you will. So I'll go ahead to the next slide and talk about the agenda for today's webinar. Before I get into that, though, just a couple of logistics items to note. We will be sharing a recap of this webinar, including a recording and slides afterward. So I know that question comes up a lot, but don't worry, we will have this resource living on our website shortly. And everyone who has registered for this event will receive those links afterward. We will also have some time for Q&A at the end of the presentations. But as you have questions throughout this webinar, go ahead and put those into the Q&A function. It's a little bit easier for us to track that versus the chat. So again, please use Q&A. The panelists will see that. We will try to answer some of those questions throughout the webinar, but we'll also leave some time for moderated Q&A at the end as well. I think that is all on the logistics front. Of course, if you have any questions, feel free to add them in there. So we'll start off with just a brief Opportunity Zones industry updates and resources, and then we'll move into the real topic at hand today and talk through models for partnership, identifying local partners, and the value proposition of local partnerships. So the first, really the resources that we wanted to particularly highlight today actually just went live. So this is kind of hot off the press. We at EIG have developed an Opportunity Zone investment profile, kind of a suite of profiles looking at various Opportunity Zones deals across the country. And today we published two, one on the San Bernardino Medical Center that Lisa will be speaking about in more detail. And the other is the Phoenix community, which Graham will be speaking to in more detail. So really excited to both release these in parallel with this webinar and have an opportunity to dive into the details of these investment profiles a little bit further here on this call. But wanted to just flag that, that these two are now on our website and hopefully are helpful and valuable resources to everybody. And again, these will be circulated afterward with the links, so you'll be able to see this and have this at your disposal. Otherwise, eig.org/opportunity zones is the place to look for this and many other resources we have on the policy. So with that, I will turn it over to Rachel Riley to take us through the rest and introduce our guest speakers in terms of their presentations.
Yeah, thanks so much, Catherine. So just kind of to set the context of today's discussion, in past webinars, we provided examples of high impact projects and opportunity zones, and we've also provided strategies for measuring and articulating impact. But a lot of times, or we haven't necessarily gone deep into how this work actually gets done. So we provided high level overviews, we provided, on the back end, how folks are thinking about measuring units of affordable housing, cost savings, things like that. But we really think that in order to achieve impact, it's really these local partnerships that drive that. And those partnerships don't happen overnight. There's a lot of trust building, a lot of work and capacity building within the community that goes into that. And that's what we're really here to talk about today. And so I wanted to remind folks, this is a project that we talk about a lot. It's called the Walk in Memphis, Tennessee, but when we're thinking about projects that have high impact, a lot of times the opportunity zone investment, if it's an investment in real estate, is sort of the catalyst or the anchor for all the programming that happens around it, or the uses and activities that are complementing the actual physical asset or the real estate. So just wanted to mention it again as just a project that has used opportunity zones financing, but really with additional sources of financing, with public and private partners from the city to major corporations. They really they're enhancing what could have otherwise just been a plain vanilla OZ investment into a 30-acre mixed-use development that is really going to achieve economic growth with a lens of inclusion and equity, and is really going to drive the city of Memphis forward for future economic development. So just wanted everyone to kind of think about how we're thinking about impact in just that way. So next slide. So the projects that we have today were very specifically curated. At the beginning of Opportunity Zones, there are a lot of questions that came up. How do you deal with responsible exits? One of the projects we talk about today, part of the exit strategy is that there's a nonprofit partner in the deal and they have first right of refusal after 10 years. How do you deal with community wealth building? Another project we talk about today has offered a sidecar investment product that allows the community to invest alongside the Opportunity Fund. And of course, public-private partnerships. What do those look like and how do they come together? We were able to identify some overarching themes as we are looking across these really high impact projects. We see engagement from CDFIs. So whether CDFIs are leading these initiatives, whether they're the ones who are providing debt to the projects, or providing technical assistance, there's really a number of different ways CDFIs have engaged. We're seeing local government at the table, whether they're the end user or they're adjacent to the property. There's a number of ways that local government is participating, as well as the community in general. And then we're seeing very specific strategies that we hope folks can learn from and replicate. So pre-leasing of government buildings, neighborhood serving uses in mixed use projects. That's specifically not neighborhood serving retail. In some cases it is, but in other cases it's medical centers, healthcare centers, office space, things like that. I mentioned that crowdfunding small dollar equity investments from local residents and businesses. This has been something that I've, not to use a weird phrase, but have fangirled over for quite some time. The fact that this model has been used. And so I just can't wait for Leslie to share more information on that. And I think really key to all of this work, especially capacity building in the communities, has been the provision of technical assistance where it's needed most. And with that, I am going to turn it over to Leslie from Mosaic Development Partners to talk about a really great project in Philadelphia. And she is going to share more information about that crowdsourcing campaign that they embarked on. Leslie?
I'm sorry. Thank you so much and good afternoon to everybody. Again, my name is Leslie Smallwood Lewis. I'm one of the principals of Mosaic Development Partners, and you can actually switch to the next slide. The next few are just kind of talking about who we are and our ethos and where we focus our attention. So we are a Philadelphia-based MBE, real estate development company. We say we are a boutique real estate development firm, founded in 2008, July, before the world ended in November. So that was a very interesting time, to say the least. But we learned quite a bit in having to navigate through the recession. We focus on ground up construction, adaptive reuse as well, but primarily they are all located in underserved and marginalized communities in Philadelphia. So we work in some of the toughest neighborhoods where the poverty rate is, up above 50%, and household incomes are only in the 20,000. So, we are really mission-based, yet for profit, but we use complex capital stacks and funding subsidies to really make these projects work. And we'll get a little bit more into that in one of the next slides. Again, we use complicated financial instruments, and we also have focused a lot on modular construction as a way of saving some costs in our projects as well. For those of you who are not familiar with Philadelphia, it is a very strong union town, and oftentimes your projects are hit with a 30 to 35% premium because of that. So we have been very adamant about finding ways, because the projects that happen in these communities that need these public-private partnerships typically can't bear those costs. So when we can avoid it, we will, but oftentimes you'll learn when you incorporate certain funding sources, they trigger Davis-Bacon. And for that in Philadelphia, it's not a significant difference between the cost of Davis-Bacon and union. So to avoid the agita and the drama of not going union, you typically will go if you're using certain funding sources. Next slide. So we've done about 1 million square feet of redevelopment, about $100 million of investment in the neighborhoods, specifically 40 million in affordable housing, and through our projects, as Rachel said, it's a domino effect. When you invest in these neighborhoods, we also have created hundreds of jobs, whether they be construction or permanent FTEs. That's a big part of comes out of these projects. Next slide. Not much different. We just focused on really trying to bring positive change. In these neighborhoods, they have not seen investment for decades. And what we try to do is find a pivotal location that's going to trigger not just our development, but other investment to come into the neighborhoods. But we also try to be very thoughtful and intentional to not gentrify the neighborhoods in which we work in. Most of the neighborhoods that we work are primarily people of color. And oftentimes you see developers come in, see an opportunity because the land cost is low to come in and build. And then you start to change the complexion and really the makeup of that neighborhood. We are very committed to not having that occur. Obviously, we are one of the few African-American developers across the country. And there's a certain sensitivity that comes along with that. We make sure that that kind of flows through all of our projects. We do try to do a hybrid development approach. I wanted to mention that as well. We're not a large company because we like to rely on third party as much as possible, because that's also building those companies in the process. So we are very heavy on MBE, WBE participation in our projects, and we help to have those companies, whether they're construction companies, attorneys, engineers, architects, that they grow with us, and we create this ecosystem. So that's so you'll see that we will always remain fairly small, nimble, because we want to rely on those third parties to help grow their businesses as well. And then I already mentioned about our real interest in modular construction. So next slide. So Sharswood Ridge is a really good example of opportunity zone investment, public-private partnerships, complicated capital stacks, local stakeholders buy-in. This particular project is one that was a part of a master plan of a complete neighborhood. The Philadelphia Housing Authority, which is, our housing authority in Philadelphia, and I think one of the largest in the country. I think there's like 5 or 6 that are about the same size as the Philadelphia Housing Authority. This community had been ravaged by all the way back to the civil rights movement and never gained its traction again. It was also really troubled by 3 towers that had been built by the Housing Authority years ago. And people have read probably that was really not a good way to handle affordable housing. So they tore down 2 of the towers. It was a super block in the middle of this neighborhood with only 1 street in, 1 street out. And they tore down 2 of the towers and they kept 1 to convert it into senior housing. So that was the beginning of a larger process of redeveloping this neighborhood. Well, they have affordable housing, they've got some market housing, they've got a very nice blend of what they want to do to rebuild this entire neighborhood. They actually declared eminent domain on 1,200 vacant parcels in and around this neighborhood. So part of what they wanted to provide was also commerce and commercial goods and services to support the full master plan. You want to bring heads into the beds and bring in new people into this community, but you also have to support them with the goods and amenities to make it a well-rounded neighborhood. So that's what this project is. 6 acres adjacent to an anchor. PHA actually constructed a grade A office building, consolidated all of their offices and brought them as an anchor on this commercial corridor. So that was the first step. And then they had acquired all the parcels to the left, which is now a mixed-use center being constructed currently. 98 apartments, about 50,000 square feet of retail. And then there's also an associated parking garage that PHA needed as ancillary parking for their new office building. But on the ground floor of that is a grocery store and an urgent care. So that's all kind of incorporated into the construction of the site. So we've got essential services. We've got food coming into a food desert. We've got health and wellness. We've got a bank coming for financial services. We've got food coming. So we learned through the pandemic that we have another shopping center that is doing well because it was serving providing essential services to a community that so desperately needed it. So we have mimicked pretty much the essential services here. And then on the top of the buildings that have ground floor retail, there are 98 residential apartments. 30% of them are at 80% AMI or lower. 17 are at 60% AMI. So it is a mixed income, affordable housing project. So next slide. Just really want to go through the sources and uses because you'll really see the public-private partnership part of the project. So we do have investor equity at 2.3. Sorry guys, got dog barking, sorry. So the investor equity is $2.3 million. And on the side, you'll see that 45,000, and I'll get to that in a moment, was raised by local people through our crowdfund campaign. 150,000 developer equity. We have, 545,000, excuse me, our opportunity zone. We have another investor of 1.3 that's opportunity zone, and then another one for 250. So it's about $2.1 million of opportunity zone investment. I will say this, because we were already working in the neighborhoods, we had 4 projects already in our portfolio that qualified as opportunity zone projects when the actual legislation was released and came out, because we were already working in these neighborhoods. So it was pretty exciting that we were able to kind of jump into this space pretty quickly because we had pipeline and projects that were already pretty far down in the development schedule. So we have a state grant for those who are aware of the Redevelopment Capital Assistance Program in Pennsylvania. We also have the Philadelphia Housing Authority provided $25 million of lending to this project, and they did it at a 2% interest. So we have a sub-debt loan from PHA, and then we have a new market tax credit loan from PHA. We also incorporated new markets. I don't know who knows of that, who actually is aware of that program, but it's a very effective program to infuse dollars into certain census tracts. And we've used it very effectively now on 4 of our projects. It basically provides tax credits to typically financial institutions that are looking for that tax relief, and they infuse dollars into a project, which in essence comes in a loan structure, but after 7 years converts into a grant. So it really creates a really good amount of equity coming in. In this case, $8.1 million of new market tax credit equity was created to fill in a void in our capital stack. The other thing that people have to remember is that construction costs are the same whether you're constructing in a high net worth neighborhood like Center City, or if you are developing in the neighborhoods. So, but the rents aren't the same. Your income is not the same. So that constantly creates this gap in the capital stack that has to be filled in some way. And that's where the public-private partnerships come into play. I will say the opportunity zone investment is helpful. It doesn't solve all the issues for that gap because, you know, your opportunity investors are still looking for a return. And some of my other colleagues on this panel might have had some success in getting reduced IRRs. I have not seen it significantly yet. We're still generating about a 16% IRR, and that's not including the basis points that opportunity zone investors get if they hold for the 10 years in the project. So that's an additional bump on the IRR. So that kind of goes through the capital stack. And next slide, I just wanted to kind of talk about the crowdfund campaign that we had also. Next slide, Rachel. Thank you. So this was not the first project that we did this. This was our second project. And we're just always trying to find ways to create and educate community wealth. And it's hard to find it, right? So you come into these neighborhoods, you develop, and yes, you're bringing wonderful projects, you're bringing goods and services, you're bringing affordable housing, which is absolutely wonderful. But we wanted to see if there was a way to do more. And the way that we have found is that we have incorporated crowdfunding campaign now in all of our projects. And what it allows, which typically has historically never been able to be done, is investing at small amounts into real estate deals. Typically, real estate investment is reserved to people of high net worth that are worth $2 million, or they have income of $200,000 or more. And that's your accredited investors. In 2009, that got opened up by the Jobs Act that people that are not accredited can invest into real estate. And now there are platforms that have been created as an engine and a way to really maintain and manage that process. We found smallchange.com, which is based in Pittsburgh, and I really like her platform because it's mission-based. She wants to make sure, as you see here, that you're checking certain boxes off in your project, that it's making a difference in a neighborhood. And our projects have qualified because of what we're trying to overall get accomplished in our projects. So in this particular project, we were able to raise $57,250 in $500 increments from non-accredited investors. Some of those investors live right in the neighborhood where this project is occurring. So for once, a neighborhood doesn't feel put upon sometimes. Sometimes you come into there and they don't, you engage them and you get feedback and you want them to give you examples of things that they need in the community. But this is an opportunity for them to actually see it every day and own a piece of this. So it just creates a whole different outlook for the community. And it's an educational tool. Typically in communities of Black and Brown people, investment is not something that's normal, that's discussed regularly. And this is starting a conversation. It's starting a dialogue. We're starting to see people that now contact us and say, we missed your crowdfund campaign at this project. Do you have another one coming coming up that we can invest in. So what we wanted to see happen organically is starting to happen. The conversation, the dialogue, kind of the buzz that this is something, and something that people should learn more about and teach others about. So that's part of what we are trying to get accomplished overall as a part of our business. So I don't want to monopolize time. I think that's my final slide. I hope I covered everything. Rachel, I think that's it. Yes. So I will be following the chat because I will let people know I do have to jump off a little early today. And if you have any specific questions for me, please put them in the chat and I will be answering them as other people are doing their presentations. Thanks.
Thank you so much, Leslie. So cool. And something that you said, or like the sentiment that you offered, just really struck me, where you got to the point where you're like, we're doing good work, but can we do more? And it's sort of that curiosity of like, how can we enhance this? We know we're already doing good work, but what more can we do? That's something that I also am seeing with RevOz Capital right now, where they're doing great work, but they've approached this with a sense of curiosity about what more can we do? And so that's, Leslie, I love that about the work that you guys are doing. And that's also why I'm so excited to have Lisa here from RevOz Capital to talk about their project, San Bernardino Medical Center, and some of the work they're doing around their social impact initiative. Lisa, I'll turn it over to you.
Great, thanks, Rachel. I'm Lisa Mirage, Managing Partner of RevOz Capital and Chair of our Social Impact Council. We formed RevOz in 2018, and we're early and active players in the Opportunity Zone space. We actually were Opportunity Zone Investor of the Year in 2019, and we've invested in 6 Opportunity Zone projects with a total capitalization of over 500 million in up and coming secondary markets across the United States. And we're on our 3rd fund vehicle. Our inspiration to enter the marketplace was based upon our experience. My family were co-owners of the Sacramento Kings NBA franchise, and through the ownership group, we built the new Golden One Center and redeveloped DOCO, which is Downtown Commons, the entertainment district surrounding Golden One Center in downtown Sacramento. And although the Opportunity Zone law was enacted just as the project was being completed, we really saw that it sparked revitalization in Sacramento and the local economy. We saw jobs created, new businesses in downtown Sacramento, and really what are the benefits of the Opportunity Zone program. So RevOz was formed to apply the lessons learned in Sacramento and expand into other up and coming markets across the country by utilizing the Opportunity Zone program. Next slide, please. So with regard to our social impact initiative, it's interesting because very few Opportunity Zone funds have been talking about social impact. And this is in effect one of the main reasons why we got involved with OZs. And we believe that now more than ever, coming out of COVID, lower income communities across the United States need improvement of quality of life, and existing inequities have been accelerated due to COVID. So over at RevOz, we are committed to leading from the front by helping promising but overlooked cities reach their potential. And with that, we established a social impact council. It embodies the best of Opportunity Zones. We are innovative, we're bipartisan, we're diverse, we're multidisciplinary. We have members such as Mick Cornett, who is a Republican and former mayor of Oklahoma City. We have Stephanie Rawlings Blake, who's a Democrat and former mayor of Baltimore, and thought leaders in the OZ space like our own Rachel Riley. And we even have an ex-NFL player and an ex-NBA player who've transitioned into leadership roles in commercial real estate. Our goal is really to, as it says here, build a nationally recognized model for how to consistently integrate positive social impact into Opportunity Zone investments. Next slide. So this is our project, the San Bernardino Medical Center. It's an interesting start. From what I know, in an effort to promote Opportunity Zones, the San Bernardino County Economic Development Agency partnered with Fuse to engage stakeholder alignment and community feedback. And I was lucky enough to speak with Fuse fellow Gil Keenan, who went on a true listening tour for 2.5 months. And that led to identifying the need to build upon the community asset of the county's behavioral health program for children with a new building. I think it's interesting because we often talk about needs in communities, but we sometimes miss talking about assets. And this really was an asset that grew within this community. And there was need identified. So the county issued an RFP and they selected Sedweek's development. Sedweek's reached out to equity partners, but many weren't interested due to the low income area. We were initially attracted to the project due to the strong partnership with the county and long-term credit-worthy lease. But Brandon Sedweek signed an LOI with another party while we were doing our due diligence. They visited the location and saw the low income neighborhood and withdrew their LOI. So the next day, our partner, Ryan Parkin, drove to the site when he heard the LOI was canceled. He liked Brandon, he understood the project, and he believed in the social impact the new medical center would provide. So what happened the next day, as the story goes, is we were hosting a pre-COVID basketball Hall of Fame event at our family home, which ironically was where Bill Russell got his Hall of Fame ring. And we invited Brandon. We struck a deal that night, went full board diligence, and funded the deal 3 weeks later. So we provided the equity to capitalize the project. Next slide, please. So current status of the project, you can see here the construction. This will be new office space for the San Bernardino County Department of Behavioral Health Juvenile Justice Program. It was redeveloped from the site of a one-story triplex to an 11,000 square foot built-to-suit medical office building for children needing quality mental health services through the Juvenile Justice Program. And we're excited to announce that it is slated to be finished April 30th, so just around the corner. And next slide, just talking about how it's going to impact the community. It's interesting for me to share a little bit about San Bernardino and the area. It's actually the largest county in the United States at 20,000 square miles, about the size of West Virginia, home to 2 million people. And the population is 68% minority, with 66% identifying as Black, Hispanic, or Native American, and almost 15% of the population living below the poverty line. So the focus of the building in behavioral health is actually the Juvenile Justice Center. And the Juvenile Justice Program in San Bernardino was established in 2006 to help decrease recidivism. And recidivism is a major cost to the county, the state, and to society. And just to kind of put a measurable around that, to house inmates per youth per year costs approximately $270,000. In the US, up to 70% of those involved in the juvenile justice system have at least one diagnosable mental health need, and 1 in 5 suffer from a mental illness that's so severe it impairs their ability to function as a young person and grow into a responsible adult. By providing quality mental health services to juveniles in the justice system and their families, we have the ability to reduce recidivism and really turn around lives. So that was important to us and a great story around this project. Our projected impact is 660 to 900 youth and families served annually. New full-time jobs at the center will be 8 to 10, and then there have been 500 construction jobs supported, with many of them coming from the surrounding area. This is a flagship Opportunity Zone project, not only featured with EIG, but in the White House Opportunity Zone Best Practices Report and also Milken Institute. It's not the largest project in our Revaz portfolio, but we're really proud of this public-private partnership. It's due to complete in 30 days, fully staffed and operational, helping families, cash flowing for our investors. And we believe it's a great example of how opportunity zones can not only deliver financial returns, but can really create positive social impact to communities in need. So that's an overview on San Bernardino, and back to you, Rachel.
Yeah, thank you, Lisa. So many things to touch on here. First of all, I didn't realize that this project originated with the Fuse Fellows. I have very fond memories of when the Fuse Fellows were onboarding. They came to the EIG offices with Accelerator for America, and I got to meet Gail and a number of other. I think Stacy's actually on the webinar right now. But just understanding that investment in capacity building led to this project is very important. And Donna is actually going to talk about capacity building here in a moment. And then also the recidivism piece. Our next speaker, Graham, is going to talk about how his project is also helping to address that issue as well. But before we transition to Graham, the one thing that I do want to call out that I think is important about the model here is that as a lot of localities may be struggling around budget cuts. I know that they just got an infusion through the recent ARPA, but this may be a great model for, if they have capital improvement needs, if they need a new building and they can't provide funding for that upfront, so this projects may be stalled, an opportunity fund can come in, make that investment, and then also know that they have a long-term lease in hand. So they know who they're developing for. It takes a lot of the risk out of the deal in some ways, which gives, of course, investors some level of comfort. Hopefully I'm understanding that correctly, but it feels like a real win-win on both sides. Yep. Awesome. So thank you, Lisa, so much. Thanks for being with us. And Graham, I'm going to turn it over to you to talk about this great project that you helped jumpstart in Columbus, Ohio, that's helping to address just what Lisa also talked about, the recidivism issue.
Graham, you're muted. There you go.
I was muted. Thank you. Thank you. Hello, my name is Graham Allison. I'm with Opportunity Zone Development Group, and we are a private real estate development company that focuses on really impact investments in opportunity zones. And we are also a fund manager, minority owned as well. And we're working on our certification now. So we're looking to also increase investment in underserved areas. We were founded in 2018. I worked primarily in economic development and real estate development in Class A areas, and I was looking for a partner and that would work in these secondary areas. I found my business partner, Brian White, our CFO, and we created a company, Opportunity Zone Development Group, to raise capital based on the new legislation and then to put that to work in underserved neighborhoods. Our first project, and please, next slide, please. Really, this is our focus, really working on impact investing is what we wanted to do. And rather than working on grants and new market tax credits and such, rather than low-income housing tax credits, we were looking to use the opportunity funds as a private solution to public problems. And part of what we worked on is, next slide, please. Part of what we did starting in 2019 is we met a local nonprofit called Nothing Into Something Real Estate, NICER. And this is a nonprofit that had started a project to house ex-offenders here in Columbus, Ohio. It got stuck with a previous developer and needed to be redeveloped. And so we thought it was a good opportunity for us to come together and form a joint venture. So rather than just building the building for this entity, NICER is a partner with the entity called Cargominium Partners. We've renamed the project the Phoenix Project, and it is a 50-unit affordable housing development that we're going to use to really assist people in transitioning. And over NICER's history, they've been doing this for 14 years. They've helped about 1,000 people to re-enter society and give them a second chance. They have some wraparound services. They're located currently across the street. When we complete construction this summer, they're going to be able to have some additional office space and offer 50 people at a time really a chance to start their lives over again. So we're very happy to work with a group of civic-minded investors. We started in 2019 with the Cargominium's Opportunity Fund. We were able to reach out to the market, raise nationally. So we have investors from Florida and from Nashville and here in Ohio. And we brought them into our 2OZB, which is Cargominium partners. So we have multiple opportunity funds. And so we are now constructing, and if you can change the slide, please. I'll go over some of the how we approach this. And so what we're looking to do is to raise $3 million. And we levered that with 2.8 million from 3 different CDFIs, IFF out of Chicago, Finance Fund here in Columbus, Ohio, as well as the Affordable Housing Trust here in Columbus as well. And so we made a $3 million equity raise, and we levered that with 2.8 million to construct this project that is underway now. We have a lease with NYSER. It's a 15-year lease. They've been doing this for 14 years already. They're the largest provider of the exit program in the state of Ohio. They've had tremendous impact, which I think really struck us. Dr. Michelle Reynolds, when I met her in late 19, we really just felt a kindred spirit about her mission. We thought that we would be able to find investors that would be interested in something like this. And so we created a private placement memo. You can see one of the executive summary pages here that we use to attract the capital. I believe as Leslie mentioned, some of the that 18% internal rate of return. So we targeted about that rate, looking to consider this an opportunistic investment. So we are offering some additional benefits. It's interesting that from a public support standpoint, the state of Ohio has its own 10% state tax credits. So we did leverage that tax credit for our investors. And last year, after investing, we were able to get them a combined 300,000 in tax credits for their investment into the project. So even prior to construction and revenue, they were able to receive some benefit. So really looking to find the folks that had shared the vision with us. We were able to raise the dollars. We're under construction now. You know, it's interesting to try to increase the opportunities that folks see when you can transition someone from homelessness and give them wraparound services like NYSER and a clean, healthy place to live. You can see that recidivism drops tremendously. And working with NYSER, rather than 50%, it drops to about 5%. And so we're very happy to be able to launch this program with our certificate of occupancy this summer. And we'll have a 10-year run with NYSER. At the end of that 10 years, they do have the first right of refusal to acquire the property, and they have a 15-year lease total. So they could either acquire it or continue to buy that on a yearly basis going forward. And I'd be happy to have some questions. Thank you.
Thanks so much, Graham. I think we have a question Q&A. We're going to hold out until
Sure.
the Q&A portion of the webinar. But with that,
Absolutely.
yeah, really appreciate it. I want to turn it over to Donna Gambrell, who's done a lot of capacity building in Appalachia over the past 2 years. Donna, time flies, but
Yes,
I leave it to you to share how long it's been that you've been working on Opportunity Appalachia. But I'm going to brag on Donna a little bit. She's the former director of the Community Development Financial Institution Fund at Treasury. And so she really knows what she's talking about when we're discussing community investment and intermediaries and how this all actually gets done on the ground. So who better to lead this piece of the discussion? And we're so thrilled to have her. Donna, I'll turn it over to you.
Thank you, Rachel. Thank you for those kind remarks. And it's a pleasure to be on the panel with such wonderful folks who are doing great work. I'm happy to see, Graham, that you have a couple of CDFIs in the mix as well. And a couple of those are actually our members. So I'm the president and CEO of Appalachian Community Capital. This is a CDFI intermediary. And basically, we are a member organization. There are 23 CDFIs located and doing business in the Appalachian region. And the region covers all of West Virginia and portions of 12 other states, starting at the bottom tip of New York and following the spine of the Appalachian Mountains all the way down to the top point of Mississippi. You know, when the Opportunity Zones legislation was passed, there was not a lot of discussion initially in rural Appalachia. I think people were a bit perplexed by the legislation. I think they saw it as perhaps just as complex as New Markets tax credits are. And I certainly, having been at the CDFI fund, understood that complexity, but I also understood the benefits. And I think Leslie said it very well. When you look at what New Markets tax credits can do for projects and the benefits of that, they really are the kind of the jewel in the crown, especially for the CDFI fund programs that are offered to CDFIs. Next slide, please. And so when we started talking about opportunity zones, there was this initial reluctance in the communities. They felt that the deals would be much too small, that they really didn't have the expertise to talk to investors, that they were really challenged to identify projects. And then people started thinking about projects that were already underway. And they said, wait a minute, we are doing some work. We're actually restoring historic downtown districts. We are looking at broadband projects. We've got mixed use projects that were formerly in warehouses, abandoned warehouses, in places that no one really wanted to invest in. And I think when you look at the partnerships of all of the examples that you've heard this afternoon, what you hear time and time again is so much of this opportunity zone space is community driven. And so I was struck by Maurice Jones, who's the former CEO at local uh, Initiative Support Corporation, or LISC, who said recently at a convening that we had that the local community is really the power behind economic development projects, not the investor. And to keep that in mind, because so much of what happens in the community and economic development space is because communities have decided to be empowered to really look at ways in which they can support the projects in their community and to drive investments into those communities. And so I think that really is an important thing to remember. And I think we certainly see that in Appalachia as people began to get more interested in opportunity zones. One of the things they said most of all is that they needed that technical assistance. They needed ways in which they could identify to build their capacity. And so Appalachian Community Capital went to Appalachian Regional Commission, which is a quasi-federal entity in the region, and applied for a grant, $1 million grant, and said, listen, we're going to start small. We can't say that we can do all the opportunity zones in the region, but in Central Appalachia in particular, there really is the need to bring investment into those areas. And so we want to start with Southwest Virginia, Southeast Ohio, and West Virginia to look at ways in which we might be able to match technical assistance providers with community projects that are already underway and help those communities not only develop prospectuses, pitch decks, but also really get to the heart of what their needs were. That could have been finding an architectural design firm, or looking at ways in which they could bring other types of business expertise to their projects. Next slide, please. So we began with a 6-member consortium of regional and national organizations. And these were folks that were either community-based organizations, economic development offices, regional economic development offices, municipalities, universities, all these folks who had a real interest in their community, and not only a real interest, but they knew the community. They knew the projects down the street, around the corner. They knew the work that had already been done on those projects, and they knew the people involved. And so again, we said, let's look at how we can match those technical assistance providers with selected projects using the grants. And we estimated that just based on the projects that we were seeing, that we could probably create a little over 1,800 jobs and attract about $235 million in financing to develop all types of projects that were being showcased: manufacturing, agricultural, hotels, downtown development, retail enterprises, tech businesses, and broadband deployment. Next slide, please. And so this 6-member consortium consisted, first of all, of a steering committee. And these were, again, folks that were involved at the local level. Opportunity Southwest Virginia partnered with UVA WISE. The Hub in West Virginia, which is the leading community development organization in West Virginia, was also part of that steering committee, as well as Ohio Southeast, which is a regional economic development entity. And so at that local level, we felt we had the right people in place who could really work with the community as well in helping them identify the project. And then we also felt that it was important to bring in some national partners as well. And so we enlisted the support of Coastal Enterprises, which is a CDFI, a national CDFI located in Maine that has over 40 years of rural development experience, and said they would be happy to contribute where they could if in fact local communities were reaching out and needed some additional perspectives or expertise. We also enlisted the help of Main Street America, which has many years of working in the community development and economic development space, and particularly in providing data on specific communities. And then we looked at those other partners as well. Certainly the technical assistance providers, the Federal Reserve Bank of Richmond, which has a long history of a focus on rural communities, and with President Tom Barkin in place right now, has even risen, heightened that even more, and has really grown in visibility in terms of their interest in working with community organizations and others. We also worked with the Opportunity Exchange, who helped us not only promote the prospectuses, but clearly put them on their website as well, so that investors could go and look at the prospectuses and the details, much like the information that Leslie, Lisa, and Graham have already provided. And we worked with a arts collective in West Virginia to do some videos, and I'll talk about that later. But all of this came together in such a constructive way, because I think there was just real interest in making sure that these projects got into the front of investors, and that those investors would be able to say, that's a great project, I'm interested in investing in it. And so with the TA providers, we had a pretty rigorous process. They had to complete a request for qualifications and were vetted by the steering committee. They then had to submit a request for proposals, saying how they could actually support the proposals that were being looked at as part of the pipeline. We started with 56 proposals. We knew that even with the grant that had been provided by Appalachian Community Capital, that was not certainly enough to cover all 56 projects. So we really had to vet those projects and winnow it down to about 15 projects overall that were either shovel ready, almost shovel ready, or had such great promise that we wanted to make sure that they got move to the next level, if you will. And so in many ways, we played matchmaker between those TA providers and community projects, and the community sponsors, the project sponsors, had the option of saying, when we recommended some providers, and many of them they knew because these were local providers, they could say, would love to have them work on the project, or I've got my own provider, I'd like to work with them directly. And they certainly had the opportunity to do that. And so we spent, Leslie says 2 years, and it really was 2 years. It's coming up on 2 years, probably this summer by June. We spent a year just working with the technical assistance providers, but also working with QOFs, the Qualified Opportunity Funds. Early on, we started seeking them out, talking about the projects, talking about the progress of the projects, giving them financial data that they needed as well, so that when it came time, and the culmination of all this work was an investors convening, which we had planned to do at the end of 2020 or the beginning of 2021. We had planned to bring those investors into the region so they could see the projects, they could hear the pitches from the project leaders, and then actually either go on site to see some of the projects, or talk in private with some of the project sponsors about the projects and the way forward. Next slide, please. So we had this investor symposium, and it was, as I said, initially it was going to be an in-person event. We were hoping to bring folks to West Virginia. Of course, COVID-19 intervened, and so we had to pivot pretty quickly and say, let's go ahead and do a virtual convening. Had never been done before, but we said we're game. We had the interest of the investors. We certainly had the community projects that were well underway, and we wanted to make sure that those projects were highlighted. So we had a two-day, half-day convening where we brought 163 participants together. 40 of those were investors. Many of those investors, again, were ones we had already been working with throughout the year, but there were some new ones as well. And the panelists have already talked about the variety, the diversity of some of the investors. They're not only opportunity zone investors, but we also had new markets tax credit investors, historical tax credit investors, CDFIs who were interested in looking at ways in which they might be able to provide some of the gap financing to some of these projects as well. And so for those 2 half days, we had just a whole host of information, not only panels and of course guest speakers, but the project sponsors got a chance to do live presentations, live pitches, 7 minutes that were accompanied by 3-minute videos of their projects. And I can't tell you, I get emotional sometimes just thinking about it, because I think to see the commitment and the passion of those project sponsors, to know how much and how long they had worked on these projects, to know that even when we were at the outset of the projects, we wanted to make sure that those who were involved, developers and others, that they signed a community benefits agreement, very similar to what you see with new markets tax credits, that really lays out how they plan, how their projects will in the long term benefit the community. We also were interested in making sure that this was a diverse group of people. So we also had minority developers as well, a couple of minority developers. And even in a place like Appalachia, where people say, oh, there can't be a lot of diversity there, there is. And again, it's not as extensive perhaps as you might see in some urban markets. But I think when you looked at the whole schematic that day, what you saw were people who were diverse, racially diverse, in terms of city council members who were promoting these projects, the mayors of certain towns, certainly, again, the project sponsors as well, really talking about those projects and making sure that the investors understood that this was a region that was worth investing in. And so the results were that of those 16 projects, we now have probably at least 7 to 8 where there is work being done with the investors who have reached out and said, we're interested, let's sit down, work out the details, figure out what this financing really is going to look like, where the return on investment is. Is it 16 or 18%? Is it a little lower than that? And so there's a lot of work and communication that's already happening. One of the projects, Micronic Technologies, which is a water technology company, an operating business, actually got an investment a few weeks before the convening even happened. So they started off, I think, in a really good place and got additional interest from investors who actually attended the convening as well. And so the project sizes range from projects that are as small as $4 million, $9 million. We have a fiber network project that's $9 million to anywhere from $40 to $50 million. These are larger projects, typically mixed retail buildings that were formerly hotels, sorry, not hotels, but furniture buildings, as well as department stores that are now being converted, repurposed into mixed use retail with a commitment to, as part of that, especially in those places where you're seeing the mixed use, a commitment to make sure that there's outreach to minority small businesses, minority nonprofits as well in the area that could occupy that space. And so this has been a tremendous opportunity for us, because it has really put a light on the fact that so many communities need to build their capacity, that they may have the interest and they may have the people, they oftentimes don't have the resources. And it's really important and critical to make sure that that capacity building component is there as well. This is a model that we have said, and we now have interest from other states. We said, let's look at this as a pilot. We've certainly gotten interest from other states in the region now that they've seen that it can be done. And I really consider that true community empowerment when a community says, hey, we can do this too, that they're also interested in looking at ways in which they can work with us to replicate what's already been done in these 3 states. And interestingly enough, you know, we have even gotten interest in looking at ways in which Appalachian Community Capital can play a similar role in building the Community Development Corporation capacity, the CDC capacity in the region as well, using the same processes that we've used before and actually providing the kind of technical assistance to build the CDC capacity in the region. We have, again, communities where projects are underway. People simply just need the resources. One more thing, and I'll close right here, is that the money that was provided by the Appalachian Regional Commission for the grant went entirely into the community. So we didn't get rich with a $1 billion grant, that's for sure, but it went all into the community to working with the technical assistance providers and then the communities themselves were able to put in small contributions. But again, I think there are just so many ways in which you can help build the capacity of organizations. And I think you've heard so many examples here today, including the crowdfunding one that Leslie started out with. Again, just very innovative ways in which communities can come together, but it's the partnerships, it's the collaborations that really make these projects sing. So with that, Rachel, I will end and thank everybody for their time today, and happy to talk more about the projects.
Yeah, thank you so much, Donna. Just truly amazing work. And the Mycronic story, I mean, we may or may not be working on a future profile with them as well. Their story is really great, and looking forward to sharing that in the future. So, I think this is when we go to Q&A. Folks, remember to put any questions you may have in that Q&A box. We've been answering throughout in both the chat function and Q&A, but now's your time to ask any questions you have of these experts. They really do understand what it means to be on the ground working in communities and understand the value proposition of doing that. So, and of course, everyone's been kind enough to offer their email address if you want to follow up with them afterwards. Well, I'll get the Q&A rolling. So, one of the things that I think is hard to execute in a quick fashion, and something that is almost necessitated by the Opportunity Zones program due to some of the timing mandates, is just partnership, right? If you're an opportunity fund and you have capital that you need to deploy, and you understand that working with the community is key to your strategy, what is the best way to reach out and start building those partnerships, start leveraging those relationships immediately, and doing that in an authentic way?
Rachel, I think one way, certainly not the only way, but I think one way, we sometimes overlook the critical importance of community development financial institutions that are already in the community, oftentimes connected in various ways with economic development initiatives or projects or people. And so I would say that, one of those contributors can be a CDFI who may have either worked on projects already in a very different way in providing financing or other types of technical assistance, but certainly know a lot of the players on the ground and can connect the dots for the investor.
And Donna, that relationship goes both ways, right? There's a value proposition to the fund. There's also a value proposition to the partner. What are the local partners wanting to hear from the funds? Because a lot of times there's a trust issue on the ground, right?
Correct.
And outside parties coming in, what are they going to want to hear from those investors?
I think from the community side, you mean?
Yeah.
I think that you almost have to take your blinders off, if that makes sense, as an investor. And again, I'm thinking specifically of rural communities, because if you come in with preconceived notions that you know it all and can do it all, people pick up on that right away. And so you really do have to come in and say, I'm here to learn. I'm here to listen. That may be through roundtable or community meetings, or virtually now that we are on there. But to begin that relationship and to begin talking, I really advise any investor not to just simply come into a community and say, "Hey, I'm here. I'm here to save you all," because that just doesn't work. It really does mean that I think it requires the time and patience that it sometimes takes to make sure you understand the nuances of a community, and certainly the challenges and opportunities that are there.
Yeah, I think that applies for any guest speaker going into communities too, by the way.
Yes.
Learned. No, Catherine, I'm going to turn it over to you and see if there's any questions in the Q&A box.
Sure, we've just gotten a couple. So the most recent question we've received, each project has had to leverage and layer multiple funding sources. From your experience to date with QOZ businesses, what are some lessons learned about the stacking of this investment vehicle? And I think that goes to anyone who would like to answer it, but maybe Lisa or Graham, if you wanted to take that as well.
Hi, thanks. So yeah, really, when leveraging an opportunities fund in creating inside the qualified opportunity zone business, you can look to a multitude of programs, not just to focus on just the value of the opportunity zone, but it could be new market tax credits. We're still trying to figure out LIHTC, low-income housing tax credits benefits, because part of the appeal of opportunity zones is the exit, and there's not as much growth in that industry, but really you can layer other capital sources, so state programs, local programs, through economic development groups, things like tax abatements, perhaps even there could be even grant money that could go into infrastructure if you have a multi-use or mixed-use project or something of that nature. So really just looking to maximize economic development incentives, as well as the opportunity zone mechanism.
Great, thanks, Graham. One question, Donna, this is for you. Is Appalachian Community Capital a 501c3 or a C6? You mentioned you were a membership-based organization, and the C6 is structured that way to support its members with services and derive support fees from its members. So just curious how you're structured.
Yeah, we are actually a 501c4, and you're right, we are a membership organization and are allowed that under the 501c4 structure. We do have also a 501c3 that's a foundation, and that's almost like an affiliate of ours. So, but most of our business is done through the 501c4.
Great, thanks, Donna. There was also a question, perhaps it was just answered.
Yeah.
Great. Okay, Rachel, you beat me to it. It's perfect.
I got very excited because there was a question. A gentleman said that they had a family or approximately 20 acres in an Alabama opportunity zone, and was looking for the best point of contact out there. And, of course, I was just all too happy to say, please reach out to Opportunity Alabama, fantastic statewide organization that would love to hear from them. And so happy to also provide that contact information directly to the person who asked the question. But I'm only sharing that background because I think that at this point there are community level or state level capacity building organizations or points of contact in most places. And so for folks that are interested in leveraging existing land or have questions, there's very likely a point of contact in your community.
And Rachel, Opportunity Alabama is fantastic. I have to ditto you on that. We work with Alex a lot and communicate with him a lot as well, given the great work that he's doing.
Catherine, any more questions?
Yeah, one more from San Rafael, California, related to just utilizing the opportunity zone policy to. It looks like, sorry, I'm trying to shorten this or summarize, so I hope I'm doing it justice. But related to multifamily residential, low-income housing, and using the policy to help accomplish that community need or build that community need. The question is related to the part where we have not been successful is using this tool to create investment opportunities to solve community problems. Where can we contact or who can we contact to access technical assistance to guide us in that endeavor? So maybe broadening it out beyond just that particular community, but any kind of best practices or advice for local communities who are trying to use the opportunity zones policy to fulfill an important need, but are perhaps having a hard time doing that and need some additional assistance to do so. So maybe Donna, that may
You
go
know,
to
I'm
you.
thinking that I would start with a organization like LISC. They're a national organization. They've written some great playbooks, if you will, on opportunity zones and particularly how communities can participate effectively in this initiative. So I might start there, looking at and calling them and seeing what advice they might have, what counsel they might have.
Yeah, and I would say specifically in California, CalOZ is kind of the statewide opportunity zone body or nonprofit. And on the technical assistance piece, I believe that they have a partnership with KPMG. I don't know much more than that regarding the program or what the program is being leveraged for, but I think it would be worth checking out their website and seeing if that would be of assistance.
Great advice. Thank you both. Last question that I believe we received. Sorry, a couple more have come through. But noting that we're coming up on time, I think one question might be a nice kind of note to end on, which is how do you see the OZ program growing and adapting over the next few years? I think, we have some perspectives kind of more at the 30,000 foot level at EIG, but would love to hear from all of the panelists about on the ground, how are you seeing this evolving and adapting in your communities?
Catherine, one of the things we heard from our participants at the convening is that there really needs to be a greater attention paid to operating businesses and greater flexibility in the way investments in operating businesses occur. And so we'd certainly love to see certainly more investment, more support of those operating businesses. I think going forward, I've often said that opportunity zones are not the silver bullet. And so it is simply one tool in the toolbox, and it can be a very effective tool, but you have to look at all the other components that go into community revitalization as well. And I think for opportunity zones, it really will be important to ensure that not only that there are some compliance components put in, even more. I think there are a number of projects where people do that already, or others that people are looking at impact and assessing the impact. And I think to make that a standard part of the program would also be very helpful. Frankly, we also found that the community benefits agreement was very useful for us. It's a reminder that we live in a diverse world and that it's really important to make sure that we're looking at all sorts of diversity when we're approaching these projects as well.
And Catherine, there's a question that I think is important about the crowdfunding opportunity.
Yes.
Because I do want folks to be thinking about this. So the organization that Leslie mentioned is called Small Change. And when I spoke with Small Change, they basically have what I would call like a turnkey or white glove service where they can work with you to build out an offering document, which, obviously you're paying for, but it's better than you having to do it from scratch. And they also have an back office management system. They have the online platform. And so again, Small Change is the service provider that she used. And I would recommend folks reach out to them because it seems like they have this figured out and have gone through the legal process to understand what's needed from a securities perspective.
Great. Thank you, Rachel. That's helpful information. And while I am sorry that we are at time for the webinar, so I'm sorry we didn't get to the last couple of questions, but you'll see here that everyone's email address and contact information is on the screen. Please feel free to reach out to us if you have more specific questions about the work going on by these incredible partners that we were able to engage today. So again, thank you all for participating. Thank you so much to our guest speakers. It was really great to hear about the amazing work you're all doing in your communities with the help of this policy. And we will have all this information up on our website and distributed to attendees and registrants soon. Thank you again.